presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one and a safe one. Appreciate it, man.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Love that intro, man. That's a good one. Got me on that one a little. S&Ps. We kick it off, folks. 3:07 p.m. Wednesday trading. Apple trading higher. And yes, let's get into the markets. S&Ps right now up by 46 points or 0.7%, trading at 63.72. And you talk about an important technical area on a very short-term basis. Right back to the highs of yesterday. Doesn't get much clearer. We'll see if we can break through these areas with some volume, or if that's going to be a little bit of a ceiling. Now you back it up a little bit more than that, okay? And this is also the area of last Wednesday, right, which was Fed Day. So we are right at the spike lower. That was an area of support. We've turned it into an area of resistance. We'll see if it's resistance yet again. The S&Ps, though, up by 0.7%. A lot of the action, Apple. Oof. Remarkable, man. Excuse me. So Apple testing the highs of Thursday. And let's get over to the headline. And yeah, you're talking about $100 billion U.S. investment. That is on top of the $500 billion that they've already pledged. Okay. The announcement includes a new manufacturing program designed to bring more of Apple's supply chain to the U.S. So nonetheless, all right, regardless of the details, you have Apple up by, like I mentioned at the top of the hour there, about 15 billion shares outstanding. You're up $11. That's $165 billion in market cap, almost $170 billion in market cap added from where we were going into the close as of yesterday. And yeah, that's going to put a lift in the NASDAQ 100. And the NASDAQ 100, just like the S&Ps, right where we were. The highs of yesterday, the lows of last Wednesday. It's a little bit of an important critical technical area on a short-term basis. See if these indices can get above that area, or if that's going to be a little bit of technical resistance. The Dow, a little bit of a different story, but pretty similar, right? All the indices are trading a little different, but when you compare it on a daily basis, same deal. Right back to where we were on last Wednesday. Now, and then the Russell. Same deal, but a little bit of a different story. As the Russell taking on the chin and underperforming. Now, let's talk about the volume here. On the S&Ps, we kick it off. Come on, Thinkorswim. There we go. Now, yesterday was a little bit worrisome, folks. Okay? You trade lower. You do it with volume. You trade lower with 1.35 million contracts in the S&P. That was only versus 1.22 the prior day. The big downward days of last Thursday and Friday. Yeah, and today we've done about 1 million contracts right now. You're probably not going to get to 1.35. So we're getting volume on the way down. You would need 350,000 contracts in the final hour of trading. And you're going to get about 100 to 150 in the final trading, okay? On close, yesterday we got about 100,000 contracts, but you need 350,000. And you can see the closing bars are about 100, 150, 150. So we're probably going to be a little bit light yet again. So the bounces are coming a little bit light. The way down, they're coming with some volume. And then you take a look at the NASDAQ 100. A little bit of a different story, though, there. Look at this, right? So these tech stocks, man. Again, just continually driving everything. Apple in focus today, but let's jump around to some of those other tech stocks. You jump around to the big dog NVIDIA, up by 0.5%. They're the big dog now, man. Apple was the big dog for a while. I'll get there. Microsoft, MSFT. All right, Microsoft not participating, down by 0.3% right now. You jump over to Google, up by 1%. Yeah, Amazon on China, catching quite a lift, right? Amazon, you talk about it. Look at this run, up by 3.4%. Let's take a look at the volume on Amazon, catching quite a lift. Yeah, volume's not going to be there. These are some big days. Going to be tough to match these days, man. AWS, really, no matter what happens over the next 90 days, folks, the AWS number, next earnings, 90 days from right now, they ever miss again and Microsoft crushes it, they have a problem. And maybe there's a one-off. But if those numbers continue, the only thing Jazzy really said was we're in the early days of all this stuff, And yes, we're in the early days. But you're talking about one of your competitors, Microsoft, with Azure, that's growing their cloud, that's at $75 billion at 39%. I don't care if you're the leader, and they are the leader, Amazon. Okay, if a company with a Azure cloud of $75 billion is able to grow their business at 39%, I'm looking for bigger numbers for AWS than 17%. So they got to right that ship. And that's going to be what you're trading into in 90 days. And yeah, there's going to be an extreme buildup on volatility in terms of variance that's coming in, because that is going to be a very important number for Amazon shares. All right, let's jump around to some other equities. Disney with their numbers yesterday. And yeah, the market looking for a little bit more than what they came with. Down by 2.4% right now for Disney. It's been a heck of a run from the lows of April at 80 to 124.69. And Disney catching a little bit of a bounce, though. All right, we're down to 112, 115. You got some selling, and you had a little bit of selling yesterday. What I was talking about earlier in the program. Now, what's remarkable here is we're in a consolidation. Disney likes the 80 to the 120, or maybe 90 on the low side with a couple of drops. Whenever you think, folks, you know more than the market. Anybody who would have said that Disney can trade flat for 10 years, okay, in 2015, probably would have gotten laughed at after this thing was crushing the world, right? Trading from 29 up to 122. And if you remember this acceleration right here, in April of 2019, that's when they announced the details of their Disney Plus service. Okay, that's when they came to the public and they said, we're going to undercut Netflix. I think their original plans, I'll have to pull up original pricing. It blew the market away. It was like $3.99, maybe $2.99. Was it $1.99? I probably can't remember. It was so cheap, nobody even cared. The market loved it. They launched it right prior to COVID. You talk about timing, and then you accelerate. But yeah, we're right in that area. Now, longer term basis, yeah, they got a couple good movies on the slate, and you're looking strong. But right now, on a short term basis, this has been a technical area to the upside. Yeah, right? You want to call it. That is quite a massive head and shoulders. Boy. If that was ever the deal, you're going back to $30. I don't think Disney's going back to $30, though, folks. Their parks were on fire. I'll pull up their numbers, okay? Their parks restoration is just crushing it. And I haven't even made it to Disney yet in Orlando. Shame on me. We got to make it there, man. Yeah. All right, this market, speaking of crushing it, man. Apple shares up by $11. And we're pushing where we were. Yeah, the end of July. $215 was the price. We hit a price tag at $215.38. Tech stocks higher. Stay tuned, folks. We'll come back. We'll take a look at some other equities. We got Uber moving, as well as McDonald's on their earnings as well. Don't go away.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got S&P up by 47 points right now. NASDAQ 100 up 291. And yeah, on top of the news, so that is the news reported on Apple, but you're going to get a live show, baby, 4:30. You're going to get the president, you're going to get Tim Cook, and you're going to get the Oval Office. It's going to be an event live. Apple shares climb, and yeah, there's going to be 4:30 p.m. Eastern time for an event as they announce the details of this announcement to update the company's stated plans to spend and invest in the U.S. So market euphoric, of course, and we'll see if it can live up to the expectations. An hour and 12 minutes from right now at 4:30 p.m. Eastern time. All right, we jump back to Disney shares, down by 2.3%. A little bit of a bounce from opening near 112 this morning. And you get into Disney, forecast stronger streaming, parks growth as cord cutting continues. ESPN's going to be a big role here, as they're now going to have a whole standalone plan with ESPN. It's going to be $30. Now, revenue was up 2% overall. Net income, $5.26 billion, double from a year earlier. Earnings per share were up 16% to $1.61, excluding the Hulu tax benefit. Whatever that is, right? Yeah, they had a problem in the television networks. This is why they're breaking out ESPN. And in the short term, you may see some turmoil for sure. But they have a big problem. Linear television networks fell 15%. We're at a tipping point, man. Direct-to-consumer business generated $346 million in income. They were losing $20 million last year. They added almost 2 million subscribers. Hulu added 900,000, 51.2 million. And this is ESPN Plus. Folks, I love sports, but ESPN Plus doesn't have the good sports. That's the problem. All right, when I tune in to watch an NHL Stanley Cup Finals game, and they're like, no, sorry, you need to have a cable subscription. You don't get that on ESPN Plus. So this is a game changer in that regard. There's nothing like live entertainment, folks. We see things all the time. Now, I watched an episode of live Hard Knocks last night on HBO. It was the premiere of the new season following the Buffalo Bills. Always enjoy that stuff. But guess what? You don't need to watch that live. They're going to be able to drive signups, okay, because the fear of missing out. There's no fear of missing out for many shows. ESPN... and I've done it myself many times. When a Game 5 of the Stanley Cup Finals is coming on, folks, and the only way to get it is to sign up for ESPN, what do you think you're going to do? You're going to sign up for ESPN. And you're going to have the NFL is going to own 10% of the NFL. The NFL is going to own 10%. in ESPN in return for ESPN controlling, okay, the Red Zone network, the NFL network, and everything that comes with that. Experiences grew 8%. And a mixed bag in the box office, as they say, but parks are firing on all cylinders. Okay, and then let's talk a little bit of Uber. So we get on to Uber. And these were big numbers from Uber as well. Now, Uber's got a $20 billion buyback. How about that? $20 billion. And as I was saying this morning, remember when the market was just waiting for these companies to go from losing money to making money? Well, we are far past that point, man. Take a look at this thing. Yeah, take a look at the volume. Okay, May 12th, you accelerate higher. We hit a high of $92.90 with some volume. You accelerate again on June 23rd. You just missed getting above that area, and that was the volume. Now, maybe we're coming back just at the bottom of this. You're at the bottom of that bar at 82.22. That's the bar from May 12th, the week following their prior earnings. But realistically, you're in this channel. Yeah, 82 bucks. Remarkably, that's where we were over a year ago. Some big volume in February. And you do it again the week of May 12th. But a little bit worrisome when they put up such big numbers, man. Big numbers from Uber across the board. They beat. The only thing they slightly missed on was their actual ride-sharing business, the core of their business. Everything else they beat by a dramatic. But the market said, no, we want a little bit more at these prices right now. All right, we jump over to Microsoft shares. Down by 0.4%. Palantir, there you go, up by 2.5%. Now look at the volume on Palantir, right? I mean, I put a line on it to illustrate. I mean, you know, the high volume highs are lower. The low volume days are lower. Right out of February, you got that huge week, April 7th. But since then, you know, keep your spikes up on this one, folks. Okay? Boy, you are talking about a run, man. And like I was saying yesterday, this is one of those cases that it's just simply the valuation. I mean, we're approaching a valuation now that's $400 and something billion for a company that takes in $4 billion in sales a year. $421 billion market cap. And their sales are $4 billion. Now, this is a great article from the Journal. I think it was out today, right? I was just reading it. Yeah, out last night, okay? How they went over Washington. Because, yeah, the U.S. governmental programs that this company has right now are a huge portion of it. But then you look at that, okay? And part of it is that, so they have a 10-year deal worth $10 billion with the U.S. government. Okay, that was one. They kind of consolidated all the contracts they had in there. Palantir received more than $322 million in the first 6 months this year, 12% increase from the same period 2 years earlier. Yeah, here it is. $10 billion contract that represents a consolidation of all of the existing contracts that they currently have. Okay? They've become so deeply embedded into the Defense Department that some current and former officials said they're worried about becoming over-dependent on a single contractor for their data processing needs. Not unlike how the government has come to rely on SpaceX for launches when it comes to NASA. The Defense Department spent more than $58 billion on software in the last year. How about that number? Where's Doge, baby? No, Defense Department, right? $58 billion on software last year. Whew. And their CEO, Palantir, said Monday that he expected the company's U.S. earnings would grow tenfold in the next 5 years? Well, they better if you're trading at, folks, I think they're trading at 277 times forward PE. And it might even be more than that because we went up since then. Tesla trades at like 177. Let's see if it's in here. Price to earnings ratio, currently they're looking at 366. That's not forward, though. 366 PE. They better be jacking up those earnings. Yeah, look at that volume, though. All right, I wouldn't be as worried about the valuation if you had some accelerating volume, but you are pulling back on the volume as this market. Look at that. Yeah, that's a new all-time high today. Man, no pullback whatsoever in this equity. All right, folks, stay tuned. S&P's up by 50 points. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have the S&P's up by 50, NASDAQ 100 up by 300, and we have Shopify up by 21.2%. Now, you talk about it. That's the monthly. Okay. So we're coming right into the highs you had in 2021 right now. Mentally, technically, you want to have that on your chart. We're almost literally, right there. We had a tail in November of 2021, but we traded at about 150. This was a high of 155 in June of 2021 for 6 to 7 months before you eventually rolled over. So you have 7 months of traders at the height of the pandemic acceleration, right? That have been in a losing position in Shopify for almost 4 years, and you're back to that level. Now, with that said, okay, you really don't have a lot of volume up here, which is remarkable. You do have 319 million shares on June. That was your first acceleration. You actually made it up there, to be fair, up to almost 150 in February of that year. Then we had COVID, right? That was March. Yeah, that was 2020. That was COVID. Whew. This thing accelerates during 2020 and 21 from 33 to 176. And guess what? It needed 4 or 5 years. Okay, it was accelerating, but you gotta grow into those valuations and multiples. It's one of those risks in Palantir right now, folks, when you're trading at 100 times annual sales. Okay, but technically, we haven't been doing that type of volume on the way up. In May, you did 350 million. As in comparing it to what we did 318. So May was a big number, but look at this volume since then. Hey, maybe we get it this month, but you're going to need more volume coming into this area. We were doing 200 to 300 million shares, and I don't think we've done. Yeah, May was a big number above 300. I know, and look at that weekly. So in a weekly, 6 months ago, yeah, we'll probably do it. That was a big number, 80 million, right? But boy, that's how you break it, man. We've done 50 million already. We're going to have 2 trading days left, so you got to have 30 million shares to break above that with volume. And we're doing 8 to 9 a day, so we're probably going to have 20 million or so over the next 2 days. It's going to be close. We still might not even break over that number from 6 months ago with volume. You know that? Look at that. That last earnings acceleration when you pushed up to 130, that's probably the area we're talking about. So we have a question in the den talking about maybe 160 could be an issue, and there's your 130. But yeah, look at that one in itself, right? On a weekly basis, you're breaking above those highs right now. And with that type of move, it would be nice to see it. Now, on a daily basis, okay, let's back it up. That was your big day, and that was your volume on that week in February where you pushed those highs. Yeah, we're going to have more volume on a daily basis. But on a weekly, it's going to be close. That was a big number at those highs of about 130. And on a monthly basis, who knows where we'll be. It's only August 6th, right? So you can't figure that one out. But watch that volume on a monthly as well. You know, a longer term basis, yeah, they have not seen. The CFO was out there this morning, so they have their earnings, folks. Strong numbers for Shopify. You accelerate higher. The CFO says in the conference call they have not seen the risks of the tariffs materialize that they had talked about earlier in the year. The uncertainty, haven't seen it happen. Now, TFNN uses Shopify, folks. We're our Shopify platform, and they're a great platform. They are. They make things pretty easy, you know, and even what we use it for is not really the ideal for Shopify. You have recurring subscriptions, etc. But for small businesses, online retailers, they make it very easy for people who are not involved in computing. And then you go one step further than that. It's going to be interesting to see how all these AI agents come into everything when it comes to coding, website development, etc. You can see you're in a good spot, man. I'm ready to just be talking to a computer, right, and telling it what to do with my website. That's where we're going to be in the next year or two. Just having a casual conversation, you know, say I can make the header look a little better, have all my subscribers get emailed this, give them access to certain subscriber areas, right? Cancel newsletter list, you know, you can, it's all going to be there. And Shopify is probably going to be a beneficiary. So, you know, this is a tough one when you go up 22%. So let me ask you, Double Broad. You have a bunch, and what's your plan with it? So let's say you're in this and you have a bunch of Shopify, all right? Is this something that you're holding for 5 to 10 years that you're a believer in the long run? Or is this something that you're swing trading it where, you know, you've been in this and you're trading it because it's one of the better benefactors, long-term hold? Yeah. I mean, you can't ever go wrong taking some off the table, but where else are you going to put it right now unless you have a plan? You know, this thing's well-positioned. Jump over, you're talking about a company right now, valuation-wise, $200 billion? As in not too outlandish. Yeah, I know, right? And that's the risk reward. And listen, like my dad used to say, you can't ever go wrong taking a few free shares or something like that, or just taking a little bit off the table, because yeah. And hey, if you're going to do it, let's put it this way. So here's a great way to think about this, folks, okay? Because, man, we all go through this, right? It's a great question, Double Broad. Say, man, I've been in these before, right? We've had the run up. Where do you sell? You're never going to get the peak, folks. You're never going to get the peak. The one thing I've learned that experience has helped me with is that you're never going to get the peak on the buy or the sell. And trying to get the peak is the biggest problem of all. Okay, sometimes you get into this mentality where like, oh, if I can't get into a trade after it's already moved too far, right? Because I didn't buy in at the lows. No, don't think like that, okay? What I would do is make your decision at least right now, Double Broad, okay? And I say that as in you make your decision because this is the important technical area, right? You're going to take some off the table, take some off the table. Maybe you set yourself a little bit of a stop, okay? You could give yourself a trailing stop for a portion of the position. But the reason why I say is make your position right now because you don't want to start deciding when it starts cascading lower if possible, right? You've just traded from 65 to 154. You go back just over a year ago and you're at 48 to 150, and you are now accelerating into the highs of 2021 where, yeah, you know, when things changed, you went from $176 to $23. So if you're going to make a decision, make it when you're at that critical technical area so that you're not waiting, as in you're at the point, you're at an exact point. You want to take a little off the table, take it off now, because in the short term, you know, sometimes I say you don't have to be brilliant, right? You don't have to be brilliant to look at a chart sometime and say, oh, yeah, that's where it's going to face a little resistance. Well, you're right back to where you were right now. But Shopify in the long term, yeah, they look like they got a good thing going on, and I think it's going higher, and you're doing it. Stay tuned, folks. We're coming back.
You're looking for potential trading setups in the stock market? Then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. You get markets in the positive, and AMD putting a little bit of fear into the market last night after the close. You had AMD shares disappointing, and they ripped lower. No guidance for the chips that they're going to be selling to China. So AMD shares falling after the company failed to deliver an outlook for resuming sales in China, a crucial market for the second largest maker of AI processors. Who's the biggest? Yeah, NVIDIA. Their CEO says, as our licenses are still under review, we're not including any of the MI308 revenue in our third quarter guidance. So they're under-promising because they're not including any of it, right? But was optimistic about the overall market for AI computing. Well, that doesn't really say much just yet. Looking ahead, we see a clear path to scaling our AI business to tens of billions of dollars in annual revenue, despite uncertainty about Chinese sales of that AI processor. And this is the one that they developed for China, okay? And they're not going to even tell you how many that they're going to be able to sell. Market's a little worried about that. And you can go over to AMD. Yeah, quite a breakout of their downtrend channel in April. You're coming back. And, you know, it was a great question about Shopify, folks from Double Broad talking about, and, you know, you see these technical areas, folks, okay? In the short term, you know, you don't have to be a genius sometimes. When this equity's ripping higher, right? And you say to me, hey, where do you think the first area that you might face a little resistance to the upside might be? I'd say, I don't know. Let's look at the last time you were at a high, and you had that high out here at 174, right? Well, you got above it with the tail, and now we're ripping lower at 162. And on a daily basis, yeah, that is a volume spike, folks, right? Puts anything else to shame, and it's pretty remarkable it can do it with the type of volatility you had out here in April at the lows, some of the tariff volatility, their earnings. No, today's a big one for AMD to the downside right now, and on a weekly basis. Yeah, last week was a big one, man. Oof, I don't know if we're going to be able to do it. That was quite a sign of strength. You've done 265 million shares. You did 463 last week. This is going to be a big week, though. We got 2 full trading days left, and you can see outside of last week, this is going to be the biggest week that we've had probably since January for AMD. All right, we talked a little AMD, we talked Palantir, Disney, Uber. Let's talk a little bit of yields. And yeah, in the world of obvious statements, Fed Governor Lisa Cook called the July jobs report, but hey, she's a Fed governor. It matters what she says versus I say when it comes to what is quote-unquote obvious. It is quote-unquote concerning, and said it could signal an inflection point for the U.S. economy. The revisions are somewhat typical of turning points. Talking about in a moderated discussion organized by the Boston Fed. And yeah, we're all aware of the revisions at this point. Unemployment ticking up to 4.2%. But yeah, it should be a turning point. And that is the inherent danger of data. Okay, and it doesn't mean it's manipulated. But the only way to correct that is to maybe hold off the reading you get an extra month, right? It takes time to get those surveys. They do it on 3 months. The initial monthly replies have been dipping dramatically, and that results, folks, it's straight out statistics. You decrease your sample size, you're going to have a much larger margin of error, etc. And you're talking about a sample size that is well off where it needs to be on that number. And so, yeah, you just went from an area that you think that we're gaining almost 100,000 plus jobs a month to we're only at 30,000 plus jobs a month. I think it's an inflection point too. And every data point going forward is going to be of the utmost importance, because right now that's where the market is. That's it. Everything's rolled over. Yields have spiked. You got the 10-year right now. We're just above 4.22. Let's see where we're at. 4.22. Now, just like I've been talking about with other charts, again, we're at an important critical technical area. Okay, we've been at this 4.2 on many occasions. Now, you back it up to last year. Okay, in September, oh, we thought the party was on, man. All the cuts were coming, right? You had higher price, you had lower yields. I'll have to pull up where the 10-year was trading. Was it approaching 3.5, I think, at that point? Let's pull it up. Where were we? No, I'm only showing in September. Yeah, 3.6. 3.6. That's what I thought. You were 3.6 back there. So, you know, if this is really the inflection point, folks, there's going to be room for higher price and lower yield right now. And the dollar is what is confirming that most of all. Because the dollar hasn't caught any bid, right? The market's caught some bounces. Yields have caught a little bounces occasionally. And the dollar's saying, no, this market's rolled over. The Fed's about to start cutting. There's been a change of everything. There's been an inflection point. Pressure is going to be to the downside. And it hasn't helped gold as much as you think it may. As you take a look at this contract, in terms of the dollar, yeah. Even from where you were on Friday, we were at above 100. Yesterday, we're at 99. Today, we're at 98. And yeah, you got a nice boost on Friday, but not since then. Okay, the dollar has continued to pull back, and gold hasn't gotten that next acceleration yet. And that's just a simple case of gold, digesting some of these gains as well. And I'd make a similar comment about gold right now, okay, in the same way I was talking about Shopify. When you're at a point like this, folks, you do want to make that decision, as in, is this the point that you're going to get out or not? Because you don't want to make the decision if you roll over and then you say that that's the point. Well, no, okay? If you've had a heck of a run, don't be worried about getting out a little early if you're not willing to stay in through the pullback. That's the point. Because the bigger mistake is not making a plan. Now, we're doing all of them. So my dad would say certain things. Our man Dave White, sell when you can, not when you have to, right? And that's kind of what I was getting at. Sell when you can, not when you have to. You can right now. This is a great sell. Doesn't mean that you're not, that it's not going to accelerate higher. I think the dollar is going lower. There's a very real chance that we get next acceleration up right now. But you don't want to have to sell on the way down. Make those decisions at those critical areas ahead of time. And in the same way. All right. Let's jump around some of the equities this afternoon. Yeah, Uber slightly in the red. They put up big numbers, man, from Uber. But the market wanted more. Disney down by 2.3%. We jump over to Netflix shares. Up by 2.5% for Netflix. Apple coming up at 4:30 in the Oval Office. And there's going to be a lot of expectations when you gain $165 billion in market cap in a trading day. And yeah, they're going to have to live up to those. Live event in the Oval Office featuring Tim Cook and President Trump, and the world will be watching. Apple carrying this market higher right now up by 5.4%. NVIDIA up by 0.7%, and Amazon having a day as well, up by 3.8%. Stay tuned, folks. One more segment. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We take a look at the volume. We got 5 minutes left to go. Coming into the close, you got the S&Ps. Now, we got a lot of volume on the close. But S&Ps, it's a strong number. We're coming in at 1.06, but it's not going to be as much as yesterday. Yesterday, you were pushing 1.36. So you're trading lower on increased volume. You're getting bounces on lighter volume. All right? The red bars are larger, which are the negative days. The green bars are smaller. And it's a little bit pronounced in this market right now. NASDAQ, not the case, though. NASDAQ's going to get it, man. This deal with Apple, you know, these tech companies, Microsoft, Meta. You know, I love Amazon, but boy, that Azure, I keep talking about it. That was a dicey one. Everything else, Microsoft, Amazon's AWS was the only weakness of those tech companies, man. Only. Now you got Apple doing deals in the Oval Office at 4:30 on a Wednesday. NASDAQ's having volume right now. Today versus yesterday. You take a look at the weekly, that's going to be a tall order. Okay, that was quite a week last week with the acceleration of Thursday and Friday. See those huge volume spikes of Thursday and Friday? We have nothing like that going on this week. So on a weekly basis, the bounce we have going in the NASDAQ even, okay, it hasn't gotten us there yet. But as our man Basil Chapman would say, the day is young. Well, the week is young, right? And with that, folks, our man Basil, He comes right after my morning program at 10 a.m. Eastern Time. He does an outstanding program, the Tiger Technicians Hour. And our man Basil's got a webinar coming up in 6 days, folks. If you've never checked out the opening call, it is an outstanding time to do it, folks. Head on over to the front page of TFNN. It'll be a week from yesterday, so it's going to be next Tuesday night from 4 till 5:30 p.m. Eastern Time, talking about identifying trend changes and what action to take. You can attend that live. It'll be archived as well. Just click that banner. You'll see that information. Check it out, folks. And yeah, Basil. It's an important part in this market. Or do we have a change of trend? That's what he's going to be showing you, folks. Check it out. And boy, market's pushing highs. S&P's up by 45. Watch Apple in the after hours as they have the event going on tonight. Folks, thanks so much. Have a great night. Have a safe night. I'll see you back here 9 o'clock tomorrow for the morning market kickoff. Have a great